Hi everybody, this is Gary Dean and this is our nightly video report for Thursday, August 11th, 2016. So markets pretty much went wire to wire on the upside. There was very little pullbacks along the way, but it really hasn't changed anything. We're right back to where we were before we had the drop yesterday. So it's what's happening is a lot of work is going into these markets for getting very minor new highs before they drop, and then here's another minor new high and we had a drop. So they're getting, you know, when we had these moves here, this is when it went straight up. This is your vertical line. Now it's starting to ease off here, and eventually it's going to roll over. One of the reasons why I believe it is going to roll over is I've been showing you the larger wave count where I said this was a wave 4. Even though I thought that this possibly could have been, the start of a larger move down. But since we, continued up on it, now what happens is you make this a wave 5. And with the wave 5, it's a wave 5 of 5. And once this completes, we really should have a some type of retracement that's going to bring us down into the into these levels here, and it could go even lower than that, because this is the this is that reverse symmetrical triangle that's in place. So there's even though we're not going down, I really would caution just looking at this market as a just alongside, and it's never going to go down. It's done this over and over again, and before anybody knows what's going on, where you see the S&P down 50, 100 points, and it's kind of doing the same exact thing as it's been doing before we've had these big moves to the downside. It just lures everybody in, becomes very, very boring. Even though we have these bearish divergences and the wave count is bearish because it's looking for a pullback, and you have this bearish pattern, but everybody just ignores it because the market's not going down and every little dip is getting bid back up. And eventually that changes. And once we start breaking support, you start getting panicking. You start getting panic selling, because we have so many people that are bullish up here, just like we had so many people that were bearish down here. And it's one of those things that the tops are, it's a process for it, and you get a lot of tests to the upside before we get the breakdown. So anyway, I just wanted to show you that. I'm going to go over some of the breadth charts as well. And this is just a bullish percent for the S&P. Here you can see when it was here, this was the high. So we have a little bit of a divergence there, as far as where that is. If we take a look at the put call ratio, you can just see that there's not a lot of people that have any kind of protection or put protection. VIX is, this is the support area. We also have bullish divergences, and the last time we saw that we saw the VIX with these bullish divergences on the daily, we've seen big drops. And right now we have a huge bullish divergence, because you can see the VIX today was down 2.4%. And here's the the MACD is not even into the negative territory here. So it's making lower lows, and this is not making lower lows. So it's giving us the bullish divergence, and it's a red flag. This is another one, and this is the bullish percent for the NASDAQ, and you can see the NASDAQ is making new highs here. Here's the bullish percent, though. Look at it, it's not even close to where the previous highs were. So this is a massive bearish divergence in place, and for the breadth of the market. And again, it really is just a they're just red flags until we see selling hit. That's all they are. Here's yet another one, and this is the advanced decline. These numbers don't come in until later, so I'm not sure where it is. But you can see this is a bearish divergence we have here as well, and this is another major red flag. So let's just go to our regular charts real quick. Again, daily bearish divergences. Maybe they come up and they need to test touch the top of this reverse symmetrical triangle, but when it's done, the next move should take us someplace down to these levels. It's just a matter of when it's going to break. If you look at it at a 60-minute chart, again, bearish divergences, never had any kind of recycle with the with any kind of overbought conditions. So they press up, and again, they're luring everybody in right now, and eventually they just pull the plug and this thing drops. But this is the 5 waves that I was showing you before: 1, 2, 3, 4, and now we're into 5. So we have the bearish divergences, overbought, bearish divergences on the MACD, and just really a bearish pattern and wave count. And that's why I'm saying, I don't know when this market's going to turn. I think it's going to turn a lot sooner than some people are expecting, but it's most likely going to catch 99% of the people on the wrong side. So finally, on a 15-minute chart, again, bearish divergences in place. This is a bearish rising wedge. When you just have this many bearish things that are going on with the internals as well as the breadth, it doesn't mean that the market has to go down right then, but what it's saying is don't ignore these red flags, because things can turn, and we've seen it. They've turned in a very, very fast manner, and they don't let anybody out. So, let's see what plays out tomorrow. And that's really about it. So with that, have a great night, and I'll talk to you guys in the morning.